David Kudla is founder and CEO and chief investment strategist at Mainstay Capital Management. John Tucker talked about the record highs that we see in the S&P 500 and the NASDAQ. David, you point out in your notes that we have a data confidence crisis. How do we have a data confidence crisis and are trading at record highs? Help me merge the two here.
Well, this is one of those times when we have to reiterate that phrase, the economy is not the stock market and the stock market is not the economy. Clearly when we look at PPI, we look at this revision in jobs over the past year and over the past 2 years, all the jobs that weren't really created, right? That's the data crisis that we have. And it points to the economy feels like it should be in trouble right now. But at the same time, we had 3.3% GDP in the second quarter. We have 3.1% GDP now for the third quarter, the Atlanta Fed. So we have some conflicting hard numbers, soft numbers in looking at ISM and PMI. We go to the stock market and we had, we have very robust earnings season for the second quarter. Originally, it was going to come in at 4.9%. That was the estimate on June 30th. We're in double digits for earnings growth for the S&P 500. We've got 7% earnings growth forecasted for the third quarter. We'll beat that again. And as we saw with Oracle, the mega scalers, the hyperscalers, the second derivative plays on AI, these companies are coming out with just incredible guidance, these hockey stick projections, and that's what the market's trading on: good earnings and continued good earnings, and a Fed rate cut that we know that's coming now next week. It's either going to be 25 or maybe even 50 basis points, and the market loves that liquidity injection.
Well, David, as you mentioned, we are seeing a real strength here in the equity market, with equities climbing to new records intraday here, especially after we got that CPI report earlier this morning. What's your takeaway about the CPI report, given the fact that a lot of the market is expecting the Fed to cut next month, or next week, rather? Right.
Well, CPI for the most part came in at expectations. And we've been expecting inflation to rise a little bit. So that's in the cards. But at the same time, with the dual mandate that the Fed has, we felt earlier this year that Fed Chair Powell was focused more on the inflation part of that affects their dual mandate. We think now he's turning more towards jobs and the concern there with what we had in jobless claims today, what we've had in jobs numbers over. The labor market is clearly weakening. Monetary policy, given where we are with the data now, and the Fed says they're data driven, that they need to cut, and maybe they should be cutting 50 basis points next week.
David, do we have an everything rally right now? You look at equities, they're higher. You look at bonds, they're higher. You look at gold, it has been climbing to record highs. You look at Bitcoin. I mean, everything that's risk related is gaining, and things that are safe haven related are gaining as well.
Yeah, we have an everything rally, and it's just all the liquidity that's still out there. And that we believe is really all the liquidity that was created during the pandemic. That money continues to keep looking for a home. Money seeks the best return. And so what is gaining? Assets are gaining in price. So we see gold going up, silver going up, Bitcoin going up, hitting a new high recently, and the stock market. And so all that liquidity, we're at financial conditions right now that were as easy as they were with a lot of the accommodation done during the pandemic, and we're going to cut rates going into that. So there's really easy financial conditions out there, easy money out there, and that's what's helping to drive the stock market higher.
Well, talking about this everything rally, I'm looking at the Russell here, up 1.2% today. Do you see any opportunity in small and mid-cap companies right now?
We do. We've been talking a lot about that in our investment committee. One of the frustrating things for the if there's such a thing as a small cap bug, or the people that really want to go towards small cap stocks, is we've had so many head fakes over the year, and the Russell 2000 is shining again now, right? Recently, the Russell 2000 has done well. The prospect for that, lowering interest rates, right? The rate cuts that are coming. But we see so many head fakes. And really, we believe, the best opportunity is AI related. Come back to our favorites in IT and technology, these mega cap tech stocks, the second derivative plays. But can small cap finally have a sustained rally if the Fed is cutting rates? Yeah, small cap can, but small cap has really struggled for a lot of years. That ratio of the price of large cap versus small cap, keeps setting record highs. Recently, here small caps done better on the prospect of rate cuts, so we could get a rally here in small caps for a while.
Yeah, but you worry that once you actually get the rate cut, it's buy on rumor, sell on news, that all the benefits of a potential rate cut will have been priced in already. So when you look at small caps, I guess one of the issues that comes up is that, the head fakes come because the profit numbers, the earnings numbers don't back up the rally in their shares. When would that turn, David?
Yeah, that's a good point. The Russell 2000 has a problem in that 40% of the stocks in the Russell 2000 aren't profitable. And what's happening in the small cap sector? What happens to that index? When companies do well, they grow into the mid cap space. Also, we have a lot more companies that are staying private or going private. So small cap companies that, because of the increased M&A, are being taken out of the public sector back to private. So that index kind of gets hit from a lot of sides, and why it has a problem. But these companies that are not profitable, certainly with easier monetary conditions, that'll help. I don't know that 25 basis points or even 50 basis points saves a non-profitable company, but it certainly helps.
Well, thanks to David Kudla for joining us. He is founder, CEO, and chief investment strategist at Mainstay Capital